Here we're going to take a look at a sale. What happens when we sell some finished goods? And so here on the 28th we have the sale of 55 Doghouse Deluxe 2s, and this is finished goods job number 515, to the Horns department store for $160.50 each. And that's the sales price. That's not what cost us. We sell it, of course, for more than what it cost us, or we would go out of business. And this is invoice 716. Remember that there are 2 journal entries every time we sell inventory. There's the journal entry that deals with the sale and the sales price, and then the journal entry where we have the cost of that inventory that we sold comes out of inventory and goes into cost of goods sold. So let's start by putting the sales part of the journal entry, let's start by doing that. So I need to know how much was the total sale. We sold each doghouse for $160.50 each. So I take 160.5 times the 55 doghouses, and we get $88.27.50. So I'm now going to go to my journal entry. I'll skip down here. This is on the 28th, and I'm going to be debiting accounts receivable dash Horns. Now, of course, in real life, you would have an accounts receivable subsidiary ledger, and you would have to debit this amount to Horns' own account in the subsidiary ledger. However, for this practice set, we do not have an accounts receivable subsidiary ledger, so you won't really have to worry about that. So that's $88.27.50 is our debit. And then we credit sales, our revenue account, for $88.27.50. And we put in our explanation. Sold 55 Doghouse Deluxe 2s to Horns on account. Okay, and I'm also going to go ahead, because it would be very important, oops, got to put left justify, very important to say what invoice number, because once again that explanation is what takes us to the source document. So invoice number 716. Okay, so if anybody wanted to look up that exact invoice, they could do so. Alright, now we're going to have, we skip a space, and we have our second journal entry. Every time we sell stuff, it's going to be dated the same date. This time we're going to debit cost of goods, cost of goods sold, and we're going to credit finished goods inventory, and this was number 515. Okay, and our explanation, cost of goods sold to Horns. Okay, number 716. Alright, now I have to figure out, well, how much goes in this debit and credit? How much did it cost us for those 55 doghouses that we just sold to Horns? Well, here is where I go to my finished goods subsidiary ledger, which is in your Excel file, and I'm going to go on this third tab, finished goods ledger, and I'm going to scroll on down until I get to job number 515. Okay, and here we got Horns Department Store, and this is number 515. Okay, and so I'm going to put in my date, and this is 06/28. Okay, my reference is going to be invoice 716. Now notice that there's 3 sections on here, just like the job cost sheets. This is a received section, a sold section, and a balance section, and each section has units, cost, and amount. So the received section is if the distribution warehouse receives units in. Well, that's going to happen when we completed some dog houses back at the factory and then shipped them over here into the distribution warehouse. The warehouse is then receiving the units. Okay, so that's when the jobs are complete. They're going to go out of the factory and into the warehouse. Okay, the sold, of course, is if we've sold something, and whenever we sell something, we're shipping it out. So these are ones that are leaving the distribution warehouse. And then, of course, the balance tells us how many are left over. So right now, in the warehouse, before this transaction, we have 55 units that cost us to make $107.30 a piece. And so 55 times 107.30 is $59.01.50. That's the balance of the cost that we have sitting in the distribution warehouse, in the finished goods inventory account. And so now I'm going to have to say I did not receive any new units, so I'm going to go over here to the sold section. And how many units did we sell? Well, we sold 55. In other words, we happened to sell all of the units that we had for this particular job. So the cost of those is going to be the cost that was here. Now, we're on, PPP is on the FIFO method. And so that means first in, first out. The first costs in are the first ones to be sold. Well, here, all the 55 cost us $107.30, and so that's the cost we have here, $107.30. And so that total is going to be 55 times 107.30, which is going to be the $59.01.50. Now, if I scroll up to the top one here, and these are some stock dog houses, and here I have 60 of these dog houses. 10 of them cost me $107.30 a piece, but 50 of them cost me a little less, $106.43 a piece. And so the 60 together cost me $63.94.50, and that's what's sitting here in the warehouse of these particular stock dog houses. When I go to sell these and ship them out, if I were selling 55 of these, I would first show these 10 at $107.30 being sold, and then the other 45 at $106.43 being sold. And then in the balance column, I would only have 5 left, and they would be at $106.43. You will not have this situation. We will not be selling any of these in this project, so you will not have to worry about that little bit of complication. Okay? So here we are down. We showed that we sold the 55 units at $107.30, so that's $59.01.50. So that amount there is what I'm going to use for my journal entry. And I also have to fill out this new balance. So if I had 55 units and I sold and shipped out 55 units, obviously I don't have any units left. So I'm going to put a 0 there, 0 cost, and a 0 amount for my ending balance for this particular one. Now I'm going to go back to my journal entry, and for this cost of goods sold debit, I got $59.01.50, and my finished goods inventory credit, $59.01.50, and I can also put an X in my post reference column to show that I posted it to the finished goods inventory. This concludes part 3.